Question 1. In Colorado, Mr. Rodriguez is considering purchasing a life insurance policy to provide financial protection for his family. He wants a policy that offers a death benefit and a cash value component. Which type of insurance policy would best suit his needs? A. Term life insurance policy. B. Universal life insurance policy. C. Whole life insurance policy. D. Variable life insurance policy. The correct answer, C. Whole life insurance policy. Explanation. Whole life insurance policies in Colorado offer both a death benefit and a cash value component. The death benefit provides financial protection to the insured's beneficiaries upon the insured's death, while the cash value component accumulates over time on a tax-deferred basis. This cash value can be accessed by the policyholder through policy loans or withdrawals during the insured's lifetime, providing a source of liquidity or supplemental income. Whole life insurance policies typically have fixed premiums and guarantees, providing stability and predictability to the policyholder. It's important to note that the cash value growth is subject to the terms outlined in the policy, and accessing it may affect the death benefit amount. Therefore, Mr. Rodriguez's preference for a policy with both a death benefit and a cash value component aligns with the features offered by a whole life insurance policy. Question 2. Sarah is exploring her options for life insurance in Colorado. She is concerned about affordability and wants coverage for a specific period, such as 20 years. Which type of insurance policy should she consider? A. Universal life insurance policy. B. Whole life insurance policy. C. Term life insurance policy. D. Variable life insurance policy. The correct answer, C. Term life insurance policy. Explanation. Term life insurance policies in Colorado provide coverage for a specified period, such as 10, 20, or 30 years. These policies offer a death benefit to the beneficiaries if the insured passes away during the term of the policy. Term life insurance is often more affordable compared to permanent life insurance policies because it does not accumulate cash value and typically has lower premiums for the same coverage amount. Since Sarah is concerned about affordability and seeks coverage for a specific period, a term life insurance policy would best suit her needs. Additionally, term life insurance can be a suitable option for individuals who have temporary financial obligations or need coverage during a particular life stage, such as paying off a mortgage or providing for children until they become financially independent. Question 3. Emily is planning her estate in Colorado and wants to ensure her life insurance policy offers flexibility in premium payments and the potential to adjust the death benefit. Which type of insurance policy would be most suitable for her? A. Term life insurance policy. B. Universal life insurance policy. C. Whole life insurance policy. D. Final expense insurance policy. The correct answer, B. Universal life insurance policy. Explanation. Universal life insurance policies in Colorado offer flexibility in premium payments and the potential to adjust the death benefit and coverage amounts. These policies consist of a death benefit component, a cash value component, and the flexibility to modify premiums and coverage according to the policyholder's changing needs and financial circumstances. Policyholders can adjust the death benefit within certain limits, subject to underwriting requirements, allowing them to align the coverage with their evolving financial goals and obligations. Additionally, universal life insurance policies offer the potential for cash value growth based on interest rates and investment performance, providing a source of supplemental income or liquidity. Emily's preference for flexibility in premium payments and the ability to adjust the death benefit makes a universal life insurance policy the most suitable option for her estate planning needs. Question 4. Mrs. Thompson is interested in purchasing a life insurance policy in Colorado that not only provides coverage for her beneficiaries but also accumulates cash value over time. However, she wants the potential for higher returns based on investment performance. Which type of insurance policy should she consider? A. Term life insurance policy. B. Whole life insurance policy. C. Final expense insurance policy. D. Variable life insurance policy. The correct answer, D. Variable life insurance policy. Explanation. Variable life insurance policies in Colorado offer both a death benefit and a cash value component, similar to whole life insurance. However, what sets variable life insurance apart is the opportunity for policyholders to allocate a portion of their premiums into various investment options, such as mutual funds, stocks, or bonds. The cash value accumulation and death benefit may fluctuate based on the performance of these investments, offering the potential for higher returns but also subjecting the policy to investment risks. Policyholders assume the investment risk, and there is no guaranteed minimum cash value or death benefit, unlike whole life insurance policies. Variable life insurance policies require careful consideration and monitoring of investment performance to ensure they align with the policyholder's risk tolerance and financial goals. Given Mrs. Thompson's interest in potential higher returns based on investment performance, a variable life insurance policy would best suit her preferences, although it comes with greater investment risk compared to other types of life insurance policies. Question 5. Mr. Harris wants to purchase a life insurance policy in Colorado that specifically covers funeral expenses and other end-of-life costs to alleviate financial burdens on his family. Which type of insurance policy should he consider? A. Universal life insurance policy. B. Term life insurance policy. C. Whole life insurance policy. D. Final expense insurance policy. The correct answer, D. Final expense insurance policy. Explanation. Final expense insurance policies in Colorado are specifically designed to cover funeral expenses, medical bills, and other end-of-life costs to ease the financial burden on the insured's family or beneficiaries. These policies typically offer smaller death benefits compared to traditional life insurance policies but are sufficient to cover funeral and burial expenses, which can be substantial. Final expense insurance policies are often more accessible to individuals who may not qualify for or afford larger life insurance policies due to age or health conditions. The application process for final expense insurance is typically simplified, with fewer medical underwriting requirements. Since Mr. Harris is interested in a policy that specifically covers funeral expenses and other end-of-life costs, a final expense insurance policy would be the most suitable option for his needs. Question 6. Julia is evaluating life insurance options in Colorado and seeks a policy that offers permanent coverage with the potential for cash value accumulation and investment growth. However, she wants the flexibility to adjust premium payments and death benefits. Which type of insurance policy should she consider? A. Variable life insurance policy. B. Whole life insurance policy. C. Term life insurance policy. D. Universal life insurance policy. The correct answer, D. Universal life insurance policy. Explanation. Universal life insurance policies in Colorado offer permanent coverage with the potential for cash value accumulation and investment growth, similar to whole life insurance policies. However, what distinguishes universal life insurance is its flexibility in premium payments and death benefits. Policyholders can adjust the premium payments and death benefits within certain limits, allowing them to adapt the policy to changing financial circumstances and goals. The cash value component of universal life insurance policies accumulates on a tax-deferred basis and offers the potential for growth based on prevailing interest rates. Additionally, policyholders may have the option to allocate a portion of the cash value into investment accounts, providing the opportunity for further growth. Julia's preference for permanent coverage with flexibility in premium payments and death benefits aligns with the features offered by a universal life insurance policy, making it the most suitable option for her insurance needs in Colorado. Question 7. In Colorado, what additional coverage option can policyholders add to their life insurance policy to provide financial protection in case of accidental death? A. Critical illness rider. B. Long-term care insurance rider. C. Accidental death benefit rider. D. Disability income rider. The correct answer, C. Accidental death benefit rider. Explanation. The accidental death benefit rider in Colorado provides additional coverage in the event of death due to an accident. If the insured's death is classified as accidental according to the terms outlined in the policy, this rider pays out an additional death benefit on top of the base policy's death benefit. It is important to note that the definition of an accident and the circumstances under which the rider pays out may vary between insurance companies, so policyholders should carefully review the terms and conditions of this rider. Adding an accidental death benefit rider can provide policyholders and their beneficiaries with extra financial protection in unforeseen circumstances. Question 8. Mr. Thompson is considering purchasing a life insurance policy in Colorado and wants to ensure his coverage includes financial protection in the event of a major illness. Which rider should he consider adding to his policy? A. Disability income rider. B. Critical illness rider. C. Long-term care insurance rider. D. Accidental death benefit rider. The correct answer, B. Critical illness rider. Explanation. The critical illness rider in Colorado provides coverage for major illnesses such as cancer, heart attack, stroke, and organ failure. If the insured is diagnosed with a covered critical illness during the policy term, this rider pays out a lump sum benefit to help cover medical expenses, loss of income, or other financial obligations. Critical illness insurance can provide valuable financial protection by offering a financial cushion to policyholders during a challenging time. Mr. Thompson should consider adding a critical illness rider to his life insurance policy to enhance his coverage and ensure comprehensive protection against major health events. Question 9. Sarah is interested in securing additional income protection in case she becomes disabled and unable to work. Which rider should she consider adding to her life insurance policy in Colorado? A. Long-term care insurance rider. B. Accidental death benefit rider. C. Disability income rider. D. Spousal or child term rider. The correct answer, C. Disability income rider. Explanation. The disability income rider in Colorado provides a source of income replacement if the insured becomes disabled and is unable to work due to illness or injury. This rider typically pays out a monthly benefit to the insured during the disability period, helping to cover living expenses and other financial obligations. The definition of disability and the duration of benefits may vary between insurance policies, so it is essential for policyholders to review the terms and conditions of the rider carefully. Adding a disability income rider to her life insurance policy can provide Sarah with peace of mind knowing that she has additional income protection in case of disability. Question 10. In Colorado, what type of rider can policyholders add to their life insurance policy to cover expenses associated with long-term care services, such as nursing home care or home health care? A. Accidental death benefit rider. B. Critical illness rider. C. Long-term care insurance rider. D. Disability income rider. The correct answer, C. Long-term care insurance rider. Explanation. The long-term care insurance rider in Colorado provides coverage for expenses related to long-term care services, such as nursing home care, assisted living facilities, or home health care. This rider typically offers benefits to cover the costs of custodial care, which may not be covered by health insurance or Medicare. Policyholders can use the benefits from the long-term care insurance rider to pay for the assistance needed with activities of daily living, such as bathing, dressing, and eating, in the event of a chronic illness or disability. Adding a long-term care insurance rider to a life insurance policy can help policyholders prepare for potential long-term care needs while preserving their assets and easing the financial burden on themselves and their families. Question 11. Ms. Rodriguez wants to add coverage for her spouse to her life insurance policy in Colorado. Which type of rider should she consider adding? A. Accidental death benefit rider. B. Disability income rider. C. Spousal or child term rider. D. Critical illness rider. The correct answer, C. Spousal or child term rider. Explanation. The spousal or child term rider in Colorado allows policyholders to add coverage for their spouse or children to their life insurance policy. This rider provides a separate death benefit for the covered spouse or child, usually for a specified term, such as 10 or 20 years. Adding a spousal or child term rider to a life insurance policy can provide additional financial protection for the family in the event of the spouse's or child's death during the rider term. It is important to note that the coverage amount and duration of the rider may vary between insurance companies, so policyholders should review the terms and conditions of the rider carefully to ensure adequate protection for their loved ones. Question 12. In Colorado, what role does underwriting play in determining policy premiums and coverage for life insurance? A. Underwriting process for different types of insurance: property, liability, health, etc. B. Use of actuarial tables and mortality tables in life insurance underwriting. C. Risk assessment tools and methodologies used in underwriting. D. Role of underwriting in determining policy premiums and coverage. The correct answer: D. Role of underwriting in determining policy premiums and coverage. Explanation. Underwriting in Colorado plays a crucial role in determining policy premiums and coverage for life insurance. Underwriters assess the risk associated with insuring an individual based on factors such as age, health status, lifestyle, occupation, and medical history. The underwriting process involves evaluating the applicant's risk profile to determine the appropriate premium rate and coverage amount. Underwriters use various risk assessment tools, methodologies, and data sources, including actuarial tables and mortality tables, to evaluate the likelihood of death or disability and calculate the associated risk. Based on the underwriting assessment, insurers determine the premium rate that reflects the level of risk posed by the insured individual. Policyholders with lower risk profiles may qualify for lower premiums and higher coverage amounts, while those with higher risk profiles may face higher premiums or coverage limitations. Therefore, underwriting plays a pivotal role in ensuring that life insurance policies are priced accurately and provide adequate financial protection to policyholders. Question 13. What risk assessment tools and methodologies are commonly used by underwriters in Colorado during the underwriting process for life insurance? A. Role of underwriting in determining policy premiums and coverage. B. Use of actuarial tables and mortality tables in life insurance underwriting. C. Underwriting process for different types of insurance: property, liability, health, etc. D. Risk assessment tools and methodologies used in underwriting. The correct answer: D. Risk assessment tools and methodologies used in underwriting. Explanation. Underwriters in Colorado use various risk assessment tools and methodologies during the underwriting process for life insurance. These tools help evaluate the applicant's risk profile and determine the appropriate premium rate and coverage amount. Common risk assessment tools include medical exams, health questionnaires, laboratory tests, and medical records review. Underwriters also consider factors such as age, gender, occupation, hobbies, lifestyle habits, and family medical history when assessing risk. Additionally, underwriters may utilize predictive modeling techniques and statistical analysis to assess the likelihood of death or disability based on historical data and industry trends. By employing a combination of risk assessment tools and methodologies, underwriters can accurately evaluate the risk associated with insuring an individual and make informed decisions regarding policy premiums and coverage. Question 14. How do underwriters in Colorado use actuarial tables and mortality tables in the underwriting process for life insurance? A. Risk assessment tools and methodologies used in underwriting. B. Underwriting process for different types of insurance: property, liability, health, etc. C. Role of underwriting in determining policy premiums and coverage. D. Use of actuarial tables and mortality tables in life insurance underwriting. The correct answer: D. Use of actuarial tables and mortality tables in life insurance underwriting. Explanation. Underwriters in Colorado utilize actuarial tables and mortality tables as important tools in the underwriting process for life insurance. Actuarial tables provide statistical data on life expectancy, mortality rates, and other demographic factors based on population data and mortality experience. Underwriters use this data to assess the risk of insuring an individual and calculate the appropriate premium rate and coverage amount. Mortality tables, specifically, provide detailed information on the probability of death at different ages and under various circumstances, allowing underwriters to estimate the likelihood of death for an insured individual. By referencing actuarial and mortality tables, underwriters can make data-driven decisions and ensure that life insurance policies are priced accurately based on the associated risk. These tables serve as valuable resources in the underwriting process, enabling insurers to provide comprehensive and financially sound coverage to policyholders. Question 15. What is the primary role of underwriting in determining policy premiums and coverage for life insurance in Colorado? A. Use of actuarial tables and mortality tables in life insurance underwriting. B. Role of underwriting in determining policy premiums and coverage. C. Underwriting process for different types of insurance, property, liability, health, etc. D. Risk assessment tools in methodologies used in underwriting. The correct answer, B. Role of underwriting in determining policy premiums and coverage. Explanation. Underwriting plays a central role in determining policy premiums and coverage for life insurance in Colorado. Underwriters assess the risk associated with insuring an individual based on factors such as age, health status, lifestyle, occupation, and medical history. By evaluating the applicant's risk profile, underwriters determine the appropriate premium rate that reflects the level of risk posed by the insured individual. Additionally, underwriters assess the coverage needs and financial objectives of the applicant to determine the appropriate coverage amount and policy features. Through a thorough underwriting process, insurers can ensure that life insurance policies are priced accurately and provide adequate financial protection to policyholders. Underwriting helps insurers manage risk effectively and maintain the financial stability of the insurance company while meeting the needs of policyholders in Colorado. Question 16. During the underwriting process for life insurance in Colorado, what factors do underwriters consider when assessing the risk associated with insuring an individual? A. Underwriting process for different types of insurance, property, liability, health, etc. B. Use of actuarial tables and mortality tables in life insurance underwriting. C. Risk assessment tools in methodologies used in underwriting. D. Role of underwriting in determining policy premiums and coverage. The correct answer, C. Risk assessment tools and methodologies used in underwriting. Explanation. Underwriters in Colorado consider various factors when assessing the risk associated with insuring an individual during the underwriting process for life insurance. These factors may include the applicant's age, gender, health status, medical history, lifestyle habits, occupation, hobbies, and family medical history. Underwriters also utilize risk assessment tools such as medical exams, health questionnaires, laboratory tests, and medical records review to gather relevant information and evaluate the applicant's risk profile. Additionally, underwriters may use predictive modeling techniques and statistical analysis to assess the likelihood of death or disability based on historical data and industry trends. By considering a comprehensive range of factors and employing sophisticated risk assessment methodologies, underwriters can accurately evaluate the risk associated with insuring an individual and make informed decisions regarding policy premiums and coverage. Question 17. In Colorado, what type of rider can policyholders add to their life insurance policy to provide supplementary income in the event of disability? A. Accidental death benefit rider. B. Disability income rider. C. Critical illness rider. D. Long-term care insurance rider. The correct answer, B. Disability income rider. Explanation. The Disability Income Rider in Colorado offers supplementary income to policyholders if they become disabled and are unable to work due to illness or injury. This rider typically pays out a monthly benefit to the insured during the disability period, helping to replace lost income and cover ongoing expenses. Disability income insurance provides financial security by ensuring that policyholders can maintain their standard of living and meet financial obligations, even if they are unable to earn income due to disability. By adding a disability income rider to their life insurance policy, policyholders in Colorado can enhance their coverage and protect themselves against the financial consequences of disability. Question 18. What is the purpose of underwriting in the context of life insurance in Colorado? A. To calculate actuarial tables and mortality tables. B. To determine the appropriate premium rate and coverage for an individual. C. To issue policies to applicants without any assessment. D. To evaluate claims made by policyholders. The correct answer, B. To determine the appropriate premium rate and coverage for an individual. Explanation. Underwriting in Colorado serves the purpose of evaluating the risk associated with insuring an individual and determining the appropriate premium rate and coverage for their life insurance policy. Underwriters assess factors such as age, health status, lifestyle, occupation, and medical history to evaluate the applicant's risk profile. Based on this assessment, underwriters calculate the premium rate that reflects the level of risk posed by the insured individual. Additionally, underwriters determine the coverage amount and policy features that align with the applicant's financial needs and objectives. Through the underwriting process, insurers ensure that life insurance policies are priced accurately and provide adequate financial protection to policyholders. Underwriting plays a vital role in managing risk effectively and maintaining the financial stability of the insurance company while meeting the needs of policyholders in Colorado. Question 19. In Colorado, what feature of permanent life insurance policies allows the policy to accumulate cash value over time? A. Surrender charges and penalties. B. Policy loans. C. Cash value accumulation. D. Premium payments. The correct answer, C. Cash value accumulation. Explanation. Permanent life insurance policies in Colorado allow for cash value accumulation over time. A portion of each premium payment is allocated to the policy's cash value, which grows on a tax-deferred basis. This cash value can be accessed by the policy owner through policy loans, withdrawals, or surrenders. Cash value accumulation provides policyholders with a source of savings and can be used to supplement retirement income, fund education expenses, or meet other financial needs. Question 20. What is the consequence of policy loans in Colorado on a permanent life insurance policy? A. Increased death benefit. B. Decreased cash value. C. Surrender charges. D. Premium payments. The correct answer, B. Decreased cash value. Explanation. Policy loans in Colorado allow policyholders to borrow against the cash value of their permanent life insurance policy. However, taking out a policy loan reduces the available cash value and may decrease the death benefit if the loan is not repaid. Policy loans accrue interest, which must be paid by the policyholder, and any outstanding loan balance at the time of the insured's death is deducted from the death benefit paid to the beneficiaries. Therefore, policy loans can diminish the cash value and death benefit of a permanent life insurance policy over time. Question 21. What rights do policy owners have in Colorado regarding the ability to change beneficiaries, assign, or transfer the policy? A. Surrender charges and penalties. B. Annuity payout options. C. Policy owners' rights. D. Tax implications. The correct answer, C. Policy owners' rights. Explanation. Policy owners in Colorado have various rights concerning the ownership and management of their life insurance policies. These rights include the ability to change beneficiaries, assign or transfer the policy, and make decisions regarding policy loans and withdrawals. Policy owners can exercise these rights to adapt the policy to changing financial circumstances or personal preferences. Understanding and exercising these rights empower policy owners to effectively manage their life insurance coverage and ensure that it aligns with their financial goals and objectives. Question 22. What options are available for annuity payouts in Colorado? A. Tax implications. B. Annuity death benefits. C. Annuity payout options. D. Annuity surrender periods. The correct answer, C. Annuity payout options. Explanation. Annuities in Colorado offer various payout options to annuitants, depending on their financial needs and objectives. These options include life-only annuity payouts, joint life annuity payouts, and period-certain annuity payouts. Life-only annuities provide income for the annuitant's lifetime with no survivor benefits. Joint life annuities provide income for the lifetimes of two annuitants, with payments continuing until the death of the last surviving annuitant. Period-certain annuities guarantee payments for a specified period, regardless of the annuitant's lifespan. Choosing the right annuity payout option is essential for annuitants to maximize their retirement income and meet their financial goals. Question 23. What are the tax implications of annuity withdrawals and distributions in Colorado? A. Annuity surrender periods. B. Tax implications. C. Annuity payout options. D. Annuity death benefits. The correct answer, B. Tax implications. Explanation. Annuity withdrawals and distributions in Colorado have tax implications that annuitants should consider when planning for retirement income. Withdrawals from annuities are subject to ordinary income tax, and any earnings withdrawn before reaching age 59.5 may also be subject to a 10% early withdrawal penalty. However, if the annuity was purchased with after-tax dollars, non-qualified annuity, only the earnings portion of withdrawals is taxable. Annuity distributions taken as annuitized income are also taxed as ordinary income. Understanding the tax treatment of annuity withdrawals and distributions is crucial for annuitants to effectively manage their retirement income and minimize tax liabilities. Question 24. What are surrender charges and penalties in the context of life insurance policies in Colorado? A. Annuity death benefits. B. Surrender charges and penalties. C. Cash value accumulation. D. Policy loans. The correct answer, B. Surrender charges and penalties. Explanation. Surrender charges and penalties in Colorado refer to fees imposed by insurance companies when policyholders terminate or surrender their life insurance policies prematurely, usually within the surrender period. The surrender period is a specified time frame during which surrender charges apply, typically ranging from several years after policy issuance. The purpose of surrender charges is to recoup the expenses incurred by the insurance company, such as sales commissions and administrative costs, associated with issuing the policy. Surrender charges are deducted from the policy's cash value upon surrender, reducing the amount the policyholder receives. It's essential for policyholders to understand the surrender charges and penalties associated with their policies before making any decisions regarding surrender or termination. Question 25. What is the primary purpose of annuity death benefits in Colorado? A. Tax implications. B. Annuity death benefits. C. Annuity payout options. D. Annuity surrender periods. The correct answer, B. Annuity death benefits. Explanation. Annuity death benefits in Colorado serve to provide financial protection for the annuitant's beneficiaries in the event of the annuitant's death. If the annuitant passes away before receiving the full value of the annuity, the death benefit is paid out to the designated beneficiaries. The amount of the death benefit depends on the annuity contract's terms and the annuitant's age at the time of death. Annuity death benefits ensure that the annuitant's beneficiaries receive a guaranteed payout, regardless of whether the annuitant has received all of the annuity payments. Understanding the availability and terms of annuity death benefits is essential for annuitants to include in their estate planning and provide financial security for their loved ones. Question 26. What implications do policy loans have for the cash value of permanent life insurance policies in Colorado? A. Premium payments. B. Surrender charges. C. Decreased cash value. D. Cash value accumulation. The correct answer, C. Decreased cash value. Explanation. Policy loans in Colorado allow policyholders to borrow against the cash value of their permanent life insurance policies. However, taking out a policy loan reduces the available cash value and may decrease the death benefit if the loan is not repaid. Policy loans accrue interest, which must be paid by the policyholder, and any outstanding loan balance at the time of the insured's death is deducted from the death benefit paid to the beneficiaries. Therefore, policy loans can diminish the cash value and death benefit of a permanent life insurance policy over time. Question 27. What are annuity surrender periods and surrender charges designed to discourage in Colorado? A. Policy loans. B. Tax implications. C. Cash value accumulation. D. Early policy termination. The correct answer, D. Early policy termination. Explanation. Annuity surrender periods and surrender charges in Colorado are designed to discourage early policy termination. The surrender period is a specified time frame during which surrender charges apply if the annuitant surrenders or terminates the annuity contract. Surrender charges are imposed by insurance companies to recoup expenses associated with issuing the annuity, such as sales commissions and administrative costs. The purpose of surrender charges is to incentivize annuitants to maintain their annuity contracts for the duration of the surrender period and discourage early withdrawals or surrenders. Annuity surrender charges decrease over time and typically disappear once the surrender period ends. Question 28. What implications do policy loans have for the death benefit of permanent life insurance policies in Colorado? A. Increased death benefit. B. Tax implications. C. Surrender charges. D. Decreased death benefit. The correct answer, D. Decreased death benefit. Explanation. Policy loans in Colorado allow policyholders to borrow against the cash value of their permanent life insurance policies. However, taking out a policy loan reduces the available cash value and may decrease the death benefit if the loan is not repaid. The death benefit is typically reduced by the outstanding loan balance at the time of the insured's death, ensuring that the policyholder's beneficiaries receive the remaining death benefit after deducting the loan amount. Therefore, policy loans can diminish the death benefit of a permanent life insurance policy if not managed properly. Question 29. What is the purpose of annuity surrender periods in Colorado? A. Increased death benefit. B. Policy loans. C. Early policy termination. D. Annuity payout options. The correct answer, C. Early policy termination. Explanation. Annuity surrender periods in Colorado serve to discourage early policy termination. The surrender period is a specified time frame during which surrender charges apply if the annuitant surrenders or terminates the annuity contract. Surrender charges are imposed by insurance companies to recoup expenses associated with issuing the annuity, such as sales commissions and administrative costs. The purpose of surrender charges is to incentivize annuitants to maintain their annuity contracts for the duration of the surrender period and discourage early withdrawals or surrenders. Annuity surrender charges decrease over time and typically disappear once the surrender period ends. Question 30. What implications do surrender charges and penalties have for policyholders in Colorado? A. Decreased cash value. B. Increased death benefit. C. Tax implications. D. Surrender charges. The correct answer, A. Decreased cash value. Explanation. Surrender charges and penalties in Colorado refer to fees imposed by insurance companies when policyholders terminate or surrender their life insurance policies prematurely, usually within the surrender period. The surrender period is a specified time frame during which surrender charges apply, typically ranging from several years after policy issuance. The purpose of surrender charges is to recoup the expenses incurred by the insurance company, such as sales commissions and administrative costs, associated with issuing the policy. Surrender charges are deducted from the policy's cash value upon surrender, reducing the amount the policyholder receives. It's essential for policyholders to understand the surrender charges and penalties associated with their policies before making any decisions regarding surrender or termination. Question 31. Which entity is responsible for regulating insurance rates and forms in Colorado? A. Federal Insurance Office, FIO. B. National Association of Insurance Commissioners, NAIC. C. Colorado Division of Insurance. D. Federal Trade Commission, FTC. The correct answer, C. Colorado Division of Insurance. Explanation. The Colorado Division of Insurance is responsible for regulating insurance rates and forms within the state. It ensures that insurance companies comply with state laws and regulations regarding the pricing of insurance products and the content of insurance policy forms. The division reviews and approves insurance rates and forms to protect consumers from unfair pricing practices and to ensure that insurance policies provide adequate coverage and disclosure of terms and conditions. Question 32. What is the primary role of the State Insurance Department in Colorado? A. Insurance fraud prevention. B. Regulation of insurance licensing. C. Consumer protection and regulation of insurance practices. D. Promotion of insurance products. The correct answer, C. Consumer protection and regulation of insurance practices. Explanation. The primary role of the State Insurance Department in Colorado is consumer protection and the regulation of insurance practices. It oversees insurance companies operating within the state to ensure they comply with state laws and regulations, protect consumer interests, and maintain the financial stability of the insurance marketplace. The department regulates insurance licensing, monitors insurer solvency, investigates consumer complaints, and enforces insurance laws to promote fair and transparent insurance practices. Question 33. What measures are implemented by insurance departments in Colorado to prevent and detect insurance fraud? A. Licensing requirements for agents. B. Regulation of insurance rates. C. Consumer education programs. D. Fraud investigation units. The correct answer, D. Fraud investigation units. Explanation. Insurance departments in Colorado implement various measures to prevent and detect insurance fraud, including maintaining fraud investigation units. These units are dedicated to investigating suspected cases of insurance fraud, such as fraudulent claims, misrepresentation by policyholders or agents, and other fraudulent activities within the insurance industry. By conducting thorough investigations and collaborating with law enforcement agencies, fraud investigation units help deter fraudulent behavior, protect consumers, and maintain the integrity of the insurance marketplace. Question 34. Which entity is responsible for setting licensing and continuing education requirements for insurance agents in Colorado? A. National Association of Insurance Commissioners, NAIC. B. Colorado Division of Insurance. C. Federal Insurance Office, FIO. D. Insurance companies. The correct answer, B. Colorado Division of Insurance. Explanation. The Colorado Division of Insurance sets licensing and continuing education requirements for insurance agents within the state. These requirements ensure that insurance agents meet minimum competency standards, understand insurance laws and regulations, and maintain up-to-date knowledge of insurance products and practices. Licensing and continuing education requirements help protect consumers by ensuring that insurance agents are qualified to provide accurate information, advice, and assistance regarding insurance products and services. Question 35. How do insurance departments in Colorado regulate insurance rates and forms? A. By promoting insurance products. B. By approving insurance rates and forms. C. By conducting consumer education programs. D. By investigating insurance fraud. The correct answer, B. By approving insurance rates and forms. Explanation. Insurance departments in Colorado regulate insurance rates and forms by reviewing and approving insurance rates and policy forms submitted by insurance companies. This regulatory oversight ensures that insurance rates are fair, competitive, and actuarially sound, and that insurance policy forms comply with state laws and regulations. By approving insurance rates and forms, insurance departments protect consumers from unfair pricing practices and ensure that insurance policies provide adequate coverage and disclosure of terms and conditions. Question 36. Which entity oversees the regulation of insurance licensing and continuing education requirements for insurance agents at the federal level in the United States? A. Federal Insurance Office, FIO. B. National Association of Insurance Commissioners, NAIC. C. Securities and Exchange Commission, SEC. D. Federal Trade Commission, FTC. The correct answer, A. Federal Insurance Office, FIO. Explanation. The Federal Insurance Office, FIO, oversees the regulation of insurance licensing and continuing education requirements for insurance agents at the federal level in the United States. While insurance regulation is primarily conducted at the state level, the FIO plays a role in coordinating federal efforts related to insurance, including issues such as licensing, consumer protection, and international insurance matters. The FIO works to ensure that insurance regulation promotes the stability and competitiveness of the insurance marketplace while protecting the interests of consumers. Question 37. Mr. Smith, a licensed insurance agent in Colorado, has been presented with a lucrative opportunity to recommend an insurance policy from a particular company to his clients. However, he knows that this policy may not be the best fit for their needs. What ethical principle should Mr. Smith prioritize in this situation? A. Maximizing personal profit. B. Ensuring client satisfaction and needs. C. Following the advice of the insurance company. D. Focusing solely on closing the sale. The correct answer, B. Ensuring client satisfaction and needs. Explanation. As a licensed insurance agent in Colorado, Mr. Smith has a duty to prioritize the best interests of his clients. This includes ensuring that the insurance policies he recommends align with their needs, financial situation, and risk tolerance. Despite the potential for personal gain, Mr. Smith should prioritize client satisfaction and ethical conduct by recommending policies that genuinely benefit his clients, even if it means foregoing a lucrative opportunity. Question 38. What ethical considerations should insurance agents in Colorado take into account when handling underwriting and claims? A. Expediting the underwriting process. B. Maximizing profits for the insurance company. C. Treating all applicants and policyholders fairly and equitably. D. Denying claims to minimize payouts. The correct answer, C. Treating all applicants and policyholders fairly and equitably. Explanation. Insurance agents in Colorado are ethically obligated to treat all applicants and policyholders fairly and equitably when handling underwriting and claims. This means assessing each applicant's risk objectively and providing fair and prompt claims resolution to policyholders in accordance with the terms of their policies. Ethical underwriting and claims handling practices uphold the principles of fairness, integrity, and transparency, fostering trust and confidence in the insurance industry. Question 39. What professional codes of conduct govern the behavior of insurance agents and brokers in Colorado? A. State-specific laws and regulations. B. Internal company policies. C. Industry-wide ethical standards and codes of conduct. D. Personal moral beliefs. The correct answer: C. Industry-wide ethical standards and codes of conduct. Explanation: insurance agents and brokers in Colorado are expected to adhere to industry-wide ethical standards and codes of conduct established by professional organizations such as the National Association of Insurance Commissioners, NAIC, and industry associations. These standards outline expected behaviors, responsibilities, and ethical principles for insurance professionals, including honesty, integrity, confidentiality, and professionalism. Adhering to professional codes of conduct helps maintain the integrity of the insurance industry and ensures that consumers receive fair and ethical treatment. Question 40. Ms. Johnson, an insurance agent in Colorado, is preparing marketing materials for a new insurance product. What ethical issues should she consider when developing her marketing and advertising strategies? A. Emphasizing exaggerated benefits. B. Providing accurate and truthful information. C. Targeting vulnerable populations. D. Concealing important policy details. The correct answer: B. Providing accurate and truthful information. Explanation: when developing marketing and advertising strategies for insurance products in Colorado, insurance agents should prioritize providing accurate and truthful information to consumers. Ethical marketing practices involve clearly and transparently communicating the features, benefits, limitations, and costs of insurance products, enabling consumers to make informed decisions. Misleading or deceptive marketing tactics, such as exaggerating benefits or concealing important policy details, can harm consumers and undermine trust in the insurance industry. Therefore, ethical insurance agents should ensure that their marketing materials are honest, clear, and comply with regulatory requirements. Question 41. Mr. Martinez, an insurance agent in Colorado, has a client who is considering purchasing a policy that would yield a higher commission for him but may not be the best fit for the client's needs. What should Mr. Martinez prioritize in this situation? A. Maximizing personal commission. B. Disclosing potential conflicts of interest to the client. C. Ensuring the policy meets the client's needs and objectives. D. Persuading the client to purchase the higher commission policy. The correct answer: C. Ensuring the policy meets the client's needs and objectives. Explanation: in this situation, Mr. Martinez should prioritize ensuring that the insurance policy recommended to the client meets their needs and objectives, rather than maximizing his personal commission. Ethical conduct requires insurance agents in Colorado to act in the best interests of their clients, disclosing any potential conflicts of interest and recommending policies that genuinely benefit the client. By prioritizing client needs over personal gain, Mr. Martinez upholds ethical standards and builds trust and credibility with his clients. Question 42. What ethical principles should insurance agents in Colorado adhere to when faced with conflicts of interest in insurance sales and recommendations? A. Prioritizing personal interests. B. Disclosing conflicts of interest to clients. C. Ignoring conflicts of interest. D. Maximizing profits for the insurance company. The correct answer: B. Disclosing conflicts of interest to clients. Explanation: when insurance agents in Colorado encounter conflicts of interest in insurance sales and recommendations, they should prioritize transparency and disclose any conflicts to their clients. Disclosing conflicts of interest helps clients make informed decisions and understand any potential biases or incentives influencing the agent's recommendations. By transparently disclosing conflicts of interest, insurance agents demonstrate integrity, build trust with their clients, and fulfill their ethical obligation to act in the best interests of their clients. Question 43. What ethical considerations should insurance agents in Colorado take into account when handling underwriting and claims? A. Maximizing profits for the insurance company. B. Treating all applicants and policyholders fairly and equitably. C. Denying claims to minimize payouts. D. Exceeding policy limits to satisfy clients. The correct answer, B. Treating all applicants and policyholders fairly and equitably. Explanation. Insurance agents in Colorado are ethically obligated to treat all applicants and policyholders fairly and equitably when handling underwriting and claims. This means assessing each applicant's risk objectively and providing fair and prompt claims resolution to policyholders in accordance with the terms of their policies. Ethical underwriting and claims handling practices uphold the principles of fairness, integrity, and transparency, fostering trust and confidence in the insurance industry. Question 44. What is the primary distinction between HMOs and PPOs in the context of health insurance plans in Colorado? A. Network restrictions. B. Premium costs. C. Deductible requirements. D. Co-payment amounts. The correct answer, A. Network restrictions. Explanation. In Colorado, the primary distinction between health maintenance organizations, HMOs, and preferred provider organizations, PPOs, lies in their network restrictions. HMOs typically require members to receive care from a network of healthcare providers and often necessitate referrals from primary care physicians for specialist care. In contrast, PPOs offer more flexibility by allowing members to seek care from both in-network and out-of-network providers without requiring referrals. Understanding these network differences is crucial for individuals selecting health insurance plans in Colorado to ensure they have access to the desired healthcare providers. Question 45. What type of health insurance plan in Colorado typically offers a health savings account, HSA, option for policyholders? A. HMO. B. PPO. C. EPO. D. High Deductible Health Plan, HDHP. The correct answer, D. High Deductible Health Plan, HDHP. Explanation. In Colorado, high deductible health plans, HDHPs, typically offer a health savings account, HSA, option for policyholders. An HSA allows individuals to contribute pre-tax dollars to cover qualified medical expenses, offering tax advantages and flexibility in managing healthcare costs. HDHPs are characterized by higher deductibles and lower premiums, making them suitable for individuals seeking to save on premiums and take advantage of tax benefits while maintaining coverage for catastrophic healthcare expenses. Question 46. What is a characteristic feature of exclusive provider organization, EPO, plans in Colorado? A. Referral requirements. B. Coverage of out-of-network services. C. Flexibility in provider choice. D. Negotiated discounts with healthcare providers. The correct answer, A. Referral requirements. Explanation. A characteristic feature of exclusive provider organization, EPO, plans in Colorado is their lack of out-of-network coverage combined with no requirement for referrals from primary care physicians. EPO plans offer coverage only for services provided within a designated network of healthcare providers, and policyholders typically bear the full cost of services received from out-of-network providers unless in the case of emergency care. While EPO plans offer flexibility in provider choice within the network, they do not cover services obtained outside the network. Question 47. What type of health insurance plan in Colorado typically requires members to select a primary care physician and obtain referrals for specialist care? A. PPO. B. HMO. C. EPO. D. POS. The correct answer, B. HMO. Explanation. Health maintenance organizations, HMOs, in Colorado typically require members to select a primary care physician, PCP, and obtain referrals from the PCP for specialist care. HMOs emphasize primary care coordination and utilization management to control costs and ensure appropriate healthcare utilization, Members must receive care from within the HMO's network of providers, and referrals are necessary to access specialist services. This model promotes continuity of care and cost-effective healthcare delivery. Question 48. In Colorado, what type of health insurance plan offers the greatest flexibility in choosing healthcare providers but generally has higher out-of-pocket costs? A. Health Maintenance Organization, HMO. B. Exclusive Provider Organization, EPO. C. Preferred Provider Organization, PPO. D. Point of Service, POS. The correct answer, C. Preferred Provider Organization, PPO. Explanation. Preferred Provider Organization, PPO, plans in Colorado offer the greatest flexibility in choosing healthcare providers while generally having higher out-of-pocket costs compared to other types of plans. PPOs allow members to receive care from both in-network and out-of-network providers without requiring referrals, providing greater freedom in accessing healthcare services. However, policyholders typically pay higher deductibles, co-payments, and co-insurance for out-of-network services, resulting in higher overall costs compared to in-network care. Question 49. What is a key characteristic of government-sponsored health insurance plans in Colorado? A. Offered only to individuals below a certain income threshold. B. Administered exclusively by private insurance companies. C. Available for purchase on the individual insurance market. D. Funded by federal or state government entities. The correct answer, D. Funded by federal or state government entities. Explanation. Government-sponsored health insurance plans in Colorado, such as Medicaid and Medicare, are funded by federal or state government entities. These plans provide health coverage to eligible individuals, including low-income individuals, seniors, and individuals with disabilities. While Medicaid is jointly funded by federal and state governments and administered by states, Medicare is a federal program primarily for individuals aged 65 and older, funded by the federal government. Understanding the funding and administration of government-sponsored plans is crucial for individuals seeking coverage options in Colorado. Question 50. Which type of health insurance plan in Colorado typically emphasizes cost-effective healthcare delivery through primary care coordination and utilization management? A. Preferred Provider Organization, PPO. B. Health Maintenance Organization, HMO. C. Point of Service, POS. D. Exclusive Provider Organization, EPO. The correct answer, B. Health Maintenance Organization, HMO. Explanation. Health Maintenance Organization, HMO, plans in Colorado typically emphasize cost-effective healthcare delivery through primary care coordination and utilization management. HMOs require members to select a primary care physician, PCP, and obtain referrals for specialist care, promoting coordinated and preventive healthcare services. By focusing on primary care, HMOs aim to manage healthcare costs, improve health outcomes, and ensure appropriate utilization of healthcare services. Understanding the features and benefits of HMO plans is essential for individuals considering coverage options in Colorado. Question 51. When reviewing a health insurance policy in Colorado, what does the term deductible typically refer to? A. The percentage of covered expenses paid by the insured. B. The maximum amount the insured must pay out of pocket before the insurance company begins to pay. C. The fixed amount the insured must pay for each medical service or prescription. D. The maximum amount the insurance company will pay for covered services in a policy year. The correct answer, B. The maximum amount the insured must pay out of pocket before the insurance company begins to pay. Explanation. In Colorado health insurance policies, the deductible refers to the maximum amount the insured must pay out of pocket for covered medical expenses before the insurance company begins to pay. Once the deductible is met, the insurance company typically begins to cover a portion of the remaining eligible expenses, subject to any applicable coinsurance or copayment requirements. Question 52. What does the term copayment commonly refer to in health insurance policies in Colorado? A. The fixed amount the insured must pay for each medical service or prescription. B. The percentage of covered expenses paid by the insured. C. The maximum amount the insured must pay out of pocket before the insurance company begins to pay. D. The maximum amount the insurance company will pay for covered services in a policy year. The correct answer, A. The fixed amount the insured must pay for each medical service or prescription. Explanation. In Colorado health insurance policies, a copayment, or copay, refers to the fixed amount the insured must pay for each medical service or prescription. Copayments are typically specified for various services, such as office visits, specialist consultations, and prescription medications. Unlike deductibles, copayments are usually due at the time of service and do not count toward meeting the deductible or out-of-pocket maximum. Question 53. What is the purpose of coinsurance in a health insurance policy in Colorado? A. To limit the total amount the insured must pay out of pocket. B. To determine the maximum amount the insurance company will pay for covered services in a policy year. C. To specify the fixed amount the insured must pay for each medical service or prescription. D. To share the cost of covered services between the insured and the insurance company. The correct answer, D. To share the cost of covered services between the insured and the insurance company. Explanation. Coinsurance in Colorado health insurance policies serves to share the cost of covered services between the insured and the insurance company. After the deductible is met, coinsurance requires the insured to pay a percentage of covered expenses, while the insurance company pays the remaining percentage up to the policy's out-of-pocket maximum. Coinsurance helps distribute financial responsibility and encourages cost-sharing between the insured and the insurer. Question 54. What is the purpose of coverage limits and exclusions in health insurance policies in Colorado? A. To specify the fixed amount the insured must pay for each medical service or prescription. B. To determine the maximum amount the insurance company will pay for covered services in a policy year. C. To restrict coverage for certain medical conditions or treatments. D. To limit the total amount the insured must pay out of pocket. The correct answer, C. To restrict coverage for certain medical conditions or treatments. Explanation. Coverage limits and exclusions in Colorado health insurance policies serve to restrict coverage for certain medical conditions or treatments. These limitations outline specific services, treatments, or conditions that are not covered under the policy, or may be subject to additional requirements or restrictions. Understanding coverage limits and exclusions is essential for policyholders to accurately assess their insurance coverage and potential out-of-pocket expenses. Question 55. In a health insurance policy in Colorado, what does the term out-of-pocket maximum refer to? A. The maximum amount the insured must pay for each medical service or prescription. B. The percentage of covered expenses paid by the insured. C. The maximum amount the insurance company will pay for covered services in a policy year. D. The maximum amount the insured must pay in deductibles, copayments, and coinsurance before the insurance company covers 100% of eligible expenses. The correct answer, D. The maximum amount the insured must pay in deductibles, copayments, and coinsurance before the insurance company covers 100% of eligible expenses. Explanation. In Colorado health insurance policies, the out-of-pocket maximum refers to the maximum amount the insured must pay in deductibles, copayments, and coinsurance before the insurance company covers 100% of eligible expenses for the remainder of the policy year. Once the insured reaches the out-of-pocket maximum, the insurance company typically covers all remaining covered expenses, providing financial protection and ensuring that the insured's healthcare costs are capped for the policy year. Question 56. What is the purpose of an explanation of benefits, EOB, in health insurance in Colorado? A. To inform the insured about upcoming changes to their coverage. B. To provide a summary of covered services and the corresponding insurance payments. C. To determine eligibility for enrollment in health insurance plans. D. To serve as a legal contract between the insured and the insurance company. The correct answer, B. To provide a summary of covered services and the corresponding insurance payments. Explanation. In Colorado health insurance, an explanation of benefits, EOB, serves to provide a summary of covered services and the corresponding insurance payments. EOBs detail the healthcare services received, the amount charged by the healthcare provider, any adjustments or discounts applied, the portion covered by the insurance company, and the amount owed by the insured, if applicable. Reviewing EOBs helps insured individuals understand their healthcare expenses, verify claims processing accuracy, and track their out-of-pocket costs. Question 57. What does the term pre-authorization typically refer to in health insurance policies in Colorado? A. The process of obtaining permission from the insurance company before receiving certain medical services or treatments. B. The period during which a new insurance policy is evaluated and approved. C. The legal requirement for insurance companies to provide advance notice of changes to coverage. D. The process of transferring coverage from one insurance company to another. The correct answer, A. The process of obtaining permission from the insurance company before receiving certain medical services or treatments. Explanation. In Colorado health insurance policies, pre-authorization refers to the process of obtaining permission from the insurance company before receiving certain medical services or treatments. Insurance companies may require pre-authorization for specific procedures, treatments, or medications to ensure medical necessity, verify coverage, and control costs. It is essential for insured individuals and healthcare providers to obtain pre-authorization as required to avoid potential claim denials or coverage limitations. Question 58. In Colorado, what factors typically affect an individual's insurability for health insurance coverage? A. Age, gender, and occupation. B. Marital status, education level, and income. C. Smoking status, medical history, and lifestyle choices. D. Vehicle ownership, credit score, and geographic location. The correct answer, C. Smoking status, medical history, and lifestyle choices. Explanation. In Colorado, several factors can influence an individual's insurability for health insurance coverage. These factors often include smoking status, medical history, including pre-existing conditions, and lifestyle choices such as diet, exercise habits, and participation in risky activities. Insurers assess these factors during the underwriting process to determine the level of risk associated with insuring the individual and may adjust premiums or coverage accordingly. Question 59. What is the primary goal of risk selection and classification in health insurance underwriting in Colorado? A. To minimize insurance premiums for all policyholders. B. To identify and assess potential risks associated with insuring individuals. C. To maximize profits for insurance companies. D. To guarantee coverage for all applicants regardless of risk factors. The correct answer, B. To identify and assess potential risks associated with insuring individuals. Explanation. In Colorado health insurance underwriting, the primary goal of risk selection and classification is to identify and assess potential risks associated with insuring individuals. By evaluating factors such as medical history, lifestyle choices, and demographics, insurers can determine the likelihood of claims and adjust premiums or coverage options accordingly. This process helps insurers manage risk effectively and maintain financial stability while providing coverage to policyholders. Question 60. What is the significance of the underwriting process for health insurance in Colorado? A. To determine eligibility for government-sponsored health insurance programs. B. To establish premium rates and coverage levels based on risk assessment. C. To provide medical treatment and services to policyholders. D. To regulate insurance agents' licensing and continuing education requirements. The correct answer, B. To establish premium rates and coverage levels based on risk assessment. Explanation. In Colorado, the underwriting process for health insurance plays a crucial role in establishing premium rates and coverage levels based on risk assessment. During underwriting, insurers evaluate applicants' health status, medical history, and other risk factors to determine eligibility for coverage and to set appropriate premium rates. This process helps insurers manage risk, ensure financial viability, and provide adequate coverage to policyholders while maintaining regulatory compliance. Question 61. How does the underwriting process for health insurance in Colorado impact coverage decisions? A. It guarantees coverage for all applicants regardless of risk factors. B. It assesses potential risks and determines eligibility and premium rates. C. It solely focuses on maximizing profits for insurance companies. D. It requires policyholders to provide proof of income and employment status. The correct answer, B. It assesses potential risks and determines eligibility and premium rates. Explanation. The underwriting process for health insurance in Colorado assesses potential risks associated with insuring individuals and determines eligibility and premium rates accordingly. Insurers evaluate factors such as medical history, lifestyle choices, and demographics to assess the level of risk and likelihood of claims. Based on this assessment, insurers make coverage decisions, including determining eligibility and setting premium rates, to ensure financial stability and provide adequate coverage to policyholders. Question 62. How does the underwriting process for health insurance in Colorado differ from that of other types of insurance? A. Health insurance underwriting focuses primarily on financial criteria. B. Health insurance underwriting considers factors such as medical history and lifestyle. C. Health insurance underwriting does not involve risk assessment. D. Health insurance underwriting is not regulated by state laws. The correct answer, B. Health insurance underwriting considers factors such as medical history and lifestyle. Explanation. Unlike some other types of insurance, such as property or auto insurance, health insurance underwriting in Colorado considers factors such as medical history, lifestyle choices, and demographics. This comprehensive assessment helps insurers determine an individual's risk profile and establish appropriate premium rates and coverage levels based on health-related factors. Question 63. What role do insurance agents play in the underwriting process for health insurance in Colorado? A. Insurance agents conduct medical examinations for applicants. B. Insurance agents evaluate risk and determine eligibility for coverage. C. Insurance agents collect and review application materials, assisting applicants through the underwriting process. D. Insurance agents have no involvement in the underwriting process. The correct answer, C. Insurance agents collect and review application materials, assisting applicants through the underwriting process. Explanation. Insurance agents in Colorado play a crucial role in the underwriting process for health insurance by collecting and reviewing application materials and assisting applicants through the process. While agents may provide guidance and support to applicants, they do not typically evaluate risk or determine eligibility for coverage. Instead, they facilitate communication between applicants and insurers, ensuring that all necessary information is submitted accurately and efficiently. Question 64. What are some common factors affecting insurability in health insurance underwriting in Colorado? A. Vehicle ownership, credit score, and geographic location. B. Smoking status, medical history, and lifestyle choices. C. Marital status, education level, and income. D. Age, gender, and occupation. The correct answer, B. Smoking status, medical history, and lifestyle choices. Explanation. In Colorado health insurance underwriting, common factors affecting insurability include smoking status, medical history, including pre-existing conditions, and lifestyle choices such as diet, exercise habits, and participation in risky activities. Insurers assess these factors during the underwriting process to determine an individual's risk profile and establish appropriate premium rates and coverage options. Question 65. Under the Affordable Care Act, ACA, provisions in Colorado, what is the purpose of the health insurance marketplace? A. To regulate insurance rates and forms. B. To provide a platform for purchasing health insurance coverage. C. To oversee licensing and continuing education requirements for insurance agents. D. To prevent insurance fraud and abuse. The correct answer, B. To provide a platform for purchasing health insurance coverage. Explanation. In Colorado, under the Affordable Care Act, ACA, provisions, the health insurance marketplace serves as a platform for individuals and small businesses to shop for and purchase health insurance coverage. It offers a range of health insurance plans that comply with ACA requirements, provides information on available subsidies and financial assistance, and facilitates enrollment in qualified health plans. The marketplace aims to increase access to affordable health insurance coverage and promote transparency in insurance options. Question 66. How do HIPAA regulations impact health insurance in Colorado? A. HIPAA regulations set minimum standards for health insurance coverage. B. HIPAA regulations govern the privacy and security of individuals' health information. C. HIPAA regulations establish eligibility criteria for government-sponsored health insurance programs. D. HIPAA regulations determine premium rates for health insurance plans. The correct answer, B. HIPAA regulations govern the privacy and security of individuals' health information. Explanation. In Colorado, HIPAA, Health Insurance Portability and Accountability Act, regulations primarily govern the privacy and security of individuals' health information. These regulations establish standards to protect sensitive health information, ensure confidentiality, and prevent unauthorized access or disclosure. HIPAA compliance is essential for healthcare providers, health plans, and other entities that handle protected health information to safeguard individuals' privacy rights and maintain trust in the healthcare system. Question 67. What role do state and federal regulations play in governing health insurance in Colorado? A. State and federal regulations determine eligibility criteria for health insurance coverage. B. State and federal regulations establish standards for health insurance benefits and coverage. C. State and federal regulations oversee licensing requirements for healthcare providers. D. State and federal regulations enforce penalties for insurance fraud. The correct answer, B. State and federal regulations establish standards for health insurance benefits and coverage. Explanation. In Colorado, both state and federal regulations play a significant role in governing health insurance. These regulations establish standards for health insurance benefits and coverage, ensuring that insurance plans comply with certain requirements regarding minimum essential coverage, essential health benefits, preventive care services, and other provisions. By setting these standards, state and federal regulations aim to protect consumers, promote access to comprehensive healthcare coverage, and maintain the integrity of the insurance market. Question 68. What is the purpose of the Affordable Care Act, ACA, provisions in Colorado? A. To provide tax incentives for purchasing health insurance coverage. B. To regulate the licensing and accreditation of healthcare facilities. C. To establish minimum standards for health insurance coverage. D. To oversee Medicaid and Medicare programs. The correct answer, C. To establish minimum standards for health insurance coverage. Explanation. The purpose of the Affordable Care Act, ACA, provisions in Colorado is to establish minimum standards for health insurance coverage. These provisions aim to ensure that health insurance plans offer essential health benefits, provide coverage for preventive care services without cost sharing, and comply with regulations regarding annual and lifetime limits on coverage. Additionally, the ACA includes provisions for expanding Medicaid eligibility, establishing health insurance marketplaces, and implementing reforms to improve access to affordable healthcare coverage for individuals and families. Question 69. How do state and federal regulations in Colorado interact regarding health insurance? A. State regulations always supersede federal regulations. B. Federal regulations always supersede state regulations. C. State and federal regulations may overlap or complement each other. D. State and federal regulations are completely independent of each other. The correct answer, C. State and federal regulations may overlap or complement each other. Explanation. State and federal regulations regarding health insurance in Colorado may interact in various ways. While federal laws such as the Affordable Care Act, ACA, set minimum standards for health insurance coverage nationwide, states like Colorado have the authority to implement additional regulations or tailor regulations to their specific needs. In some cases, state regulations may overlap with federal regulations, while in other cases, state regulations may complement federal regulations to provide more comprehensive consumer protections or address specific state healthcare priorities. Question 70. What are some key provisions of the Affordable Care Act, ACA, that impact health insurance in Colorado? A. Prohibiting discrimination based on pre-existing conditions and expanding Medicaid eligibility. B. Regulating insurance rates and forms to ensure affordability. C. Establishing requirements for insurance agent licensing and continuing education. D. Mandating the inclusion of specific coverage options in all health insurance plans. The correct answer, A. Prohibiting discrimination based on pre-existing conditions and expanding Medicaid eligibility. Explanation. Key provisions of the Affordable Care Act, ACA, that impact health insurance in Colorado include prohibiting discrimination based on pre-existing conditions, expanding Medicaid eligibility to cover more low-income individuals and families, and establishing health insurance marketplaces to facilitate the purchase of insurance coverage. These provisions aim to increase access to affordable health care, improve consumer protections, and promote transparency in insurance options. Question 71. How do HIPAA regulations protect the privacy and security of individuals' health information in Colorado? A. By requiring healthcare providers to disclose patients' medical records upon request. B. By allowing insurance companies to share individuals' health information without consent. C. By establishing standards for the use and disclosure of protected health information. D. By imposing penalties on individuals who access their own health information. The correct answer, C. By establishing standards for the use and disclosure of protected health information. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations protect the privacy and security of individuals' health information in Colorado by establishing standards for the use and disclosure of protected health information. 5. These regulations require healthcare providers, health plans, and other covered entities to implement safeguards to protect FI from unauthorized access, use, or disclosure. HIPAA also grants individuals certain rights over their health information, including the right to access and request amendments to their medical records. Violations of HIPAA regulations can result in civil and criminal penalties. The correct answer, C. By establishing standards for the use and disclosure of protected health information. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations protect the privacy and security of individuals' health information in Colorado by establishing standards for the use and disclosure of protected health information. 5. These regulations require healthcare providers, health plans, and other covered entities to implement safeguards to protect FI from unauthorized access, use, or disclosure. HIPAA also grants individuals certain rights over their health information, including the right to access and request amendments to their medical records. Violations of HIPAA regulations can result in civil and criminal penalties. Question 72. What is the purpose of health insurance marketplaces in Colorado? A. To regulate insurance rates and forms. B. To provide a platform for purchasing health insurance coverage. C. To oversee licensing and continuing education requirements for insurance agents. D. To prevent insurance fraud and abuse. The correct answer, B. To provide a platform for purchasing health insurance coverage. Explanation. Health insurance marketplaces in Colorado serve as platforms for individuals and small businesses to shop for and purchase health insurance coverage. These marketplaces offer a range of health insurance plans that comply with regulations such as the Affordable Care Act, ACA. They provide information on available subsidies and financial assistance and facilitate enrollment in qualified health plans. The purpose of these marketplaces is to increase access to affordable health insurance coverage and promote transparency in insurance options. Question 73. What are enrollment periods in health insurance marketplaces? A. Fixed periods during which individuals can purchase health insurance coverage. B. Periods during which insurance rates are adjusted based on market trends. C. Timeframes during which insurance agents undergo continuing education. D. Periods during which insurance fraud is typically detected. The correct answer, A. Fixed periods during which individuals can purchase health insurance coverage. Explanation. Enrollment periods in health insurance marketplaces are fixed periods during which individuals can purchase health insurance coverage. These periods typically occur annually, although there may be special enrollment periods available under certain circumstances, such as qualifying life events. During enrollment periods, individuals can explore their coverage options, compare plans, and select the best option for their healthcare needs. Question 74. What are subsidies and premium tax credits in the context of health insurance in Colorado? A. Government-funded programs to provide free health insurance coverage. B. Financial assistance programs to help individuals afford health insurance premiums. C. Incentives offered to insurance agents for selling health insurance policies. D. Tax deductions available to individuals who purchase health insurance coverage. The correct answer, B. Financial assistance programs to help individuals afford health insurance premiums. Explanation. Subsidies and premium tax credits in Colorado are financial assistance programs designed to help individuals afford health insurance premiums. These programs are available through the health insurance marketplace to eligible individuals with qualifying income levels. Subsidies reduce the cost of health insurance premiums, making coverage more affordable for individuals and families. Premium tax credits are applied directly to premium payments, reducing the amount individuals owe for health insurance coverage. Question 75. How do enrollment periods and special enrollment options impact access to health insurance coverage in Colorado? A. They restrict access to coverage only to certain groups of individuals. B. They provide opportunities for individuals to enroll in coverage outside of standard enrollment periods. C. They extend the duration of enrollment periods to allow more time for decision-making. D. They offer discounted premiums to individuals who enroll during special enrollment options. The correct answer, B. They provide opportunities for individuals to enroll in coverage outside of standard enrollment periods. Explanation. Enrollment periods and special enrollment options in Colorado provide opportunities for individuals to enroll in health insurance coverage outside of standard enrollment periods. These options allow individuals who experience qualifying life events, such as marriage, birth of a child, or loss of other coverage, to enroll or make changes to their coverage outside of the annual open enrollment period. Special enrollment options ensure that individuals have access to health insurance coverage when they experience significant life changes that affect their insurance needs. Question 76. In the context of health insurance marketplaces in Colorado, what role does the Affordable Care Act, ACA, play? A. It regulates insurance rates and forms. B. It provides a platform for purchasing health insurance coverage. C. It oversees licensing and continuing education requirements for insurance agents. D. It prevents insurance fraud and abuse. The correct answer, B. It provides a platform for purchasing health insurance coverage. Explanation. The Affordable Care Act, ACA, plays a significant role in health insurance marketplaces in Colorado by providing a platform for individuals and small businesses to purchase health insurance coverage. The ACA establishes regulations and standards for health insurance plans offered through these marketplaces, ensuring that plans provide essential health benefits and meet certain coverage requirements. Additionally, the ACA provides financial assistance to eligible individuals to help make health insurance coverage more affordable. Question 77. What is the primary purpose of enrollment periods in health insurance marketplaces? A. To restrict access to coverage to certain groups of individuals. B. To adjust insurance rates based on market trends. C. To extend the duration of enrollment for all individuals. D. To provide fixed periods during which individuals can purchase health insurance coverage. The correct answer, D. To provide fixed periods during which individuals can purchase health insurance coverage. Explanation. Enrollment periods in health insurance marketplaces serve the primary purpose of providing fixed periods during which individuals can purchase health insurance coverage. These periods typically occur annually, allowing individuals to explore their coverage options, compare plans, and enroll in a plan that best fits their needs. Enrollment periods help facilitate the efficient functioning of the marketplace by providing designated times for individuals to enroll in coverage. Question 78. How do subsidies and premium tax credits benefit individuals seeking health insurance coverage in Colorado? A. By providing free health insurance coverage to all residents. B. By offering incentives to insurance agents for selling health insurance policies. C. By reducing the cost of health insurance premiums for eligible individuals. D. By providing tax deductions to individuals who purchase health insurance coverage. The correct answer, C. By reducing the cost of health insurance premiums for eligible individuals. Explanation. Subsidies and premium tax credits in Colorado benefit individuals seeking health insurance coverage by reducing the cost of health insurance premiums for eligible individuals. These financial assistance programs are available through the health insurance marketplace to individuals with qualifying income levels. Subsidies directly lower the cost of premiums, making coverage more affordable, while premium tax credits are applied to premium payments, reducing the amount individuals owe for their health insurance coverage. These programs help ensure that health insurance coverage is accessible and affordable for all individuals. Question 79. What is the primary purpose of managed care organizations, MCOs, in Colorado's healthcare system? A. To increase healthcare costs for patients. B. To restrict access to healthcare services. C. To improve the quality and efficiency of healthcare delivery. D. To minimize the role of healthcare providers. The correct answer, C. To improve the quality and efficiency of healthcare delivery. Explanation. Managed care organizations, MCOs, in Colorado aim to improve the quality and efficiency of healthcare delivery. They achieve this by implementing various strategies such as care coordination, preventive care initiatives, utilization review, and provider network management. The goal is to ensure that patients receive timely and appropriate care while controlling costs and enhancing health outcomes. Question 80. What role do network structures play in managed care organizations, MCOs, in Colorado? A. They limit patient choice by restricting access to certain providers. B. They increase administrative costs for healthcare facilities. C. They facilitate collaboration and coordination among healthcare providers. D. They eliminate the need for provider contracts. The correct answer, A. They limit patient choice by restricting access to certain providers. Explanation. Network structures in managed care organizations, MCOs, often limit patient choice by restricting access to certain providers. MCOs typically negotiate contracts with specific healthcare providers to form a network of preferred providers. Patients who enroll in MCO plans may be required to seek care from within this network to receive full coverage for services. While network structures help MCOs manage costs and ensure quality, they can also limit patient autonomy in choosing healthcare providers. Question 81. What is the purpose of utilization review in managed care organizations, MCOs, in Colorado? A. To maximize healthcare costs. B. To streamline administrative processes. C. To evaluate the necessity and appropriateness of healthcare services. D. To minimize patient satisfaction. The correct answer, C. To evaluate the necessity and appropriateness of healthcare services. Explanation. Utilization review in managed care organizations, MCOs, serves the purpose of evaluating the necessity and appropriateness of healthcare services. Through utilization review processes, MCOs assess whether the services provided to patients are medically necessary and in accordance with established guidelines. This helps control costs, prevent unnecessary treatments, and ensure that patients receive high-quality care tailored to their needs. Question 82. How do managed care techniques contribute to the healthcare system in Colorado? A. By increasing healthcare costs for patients. B. By prioritizing quantity over quality of care. C. By promoting preventive care and early intervention. D. By limiting access to essential healthcare services. The correct answer, C. By promoting preventive care and early intervention. Explanation. Managed care techniques contribute to the healthcare system in Colorado by promoting preventive care and early intervention. These techniques focus on proactive measures to maintain health and prevent the onset of chronic conditions. By emphasizing preventive services, such as screenings, vaccinations, and wellness programs, managed care organizations, MCOs, aim to improve overall health outcomes and reduce the need for costly medical interventions later on. Question 83. What is the main objective of provider contracting in managed care organizations, MCOs, in Colorado? A. To exclude healthcare providers from participating in the network. B. To establish collaborative relationships with healthcare providers. C. To discourage patients from seeking medical care. D. To increase healthcare costs. The correct answer, B. To establish collaborative relationships with healthcare providers. Explanation. Provider contracting in managed care organizations, MCOs, aims to establish collaborative relationships with healthcare providers. MCOs negotiate contracts with providers to define terms of reimbursement, services covered, and quality standards within the network. By fostering partnerships with providers, MCOs can ensure access to a wide range of healthcare services for enrollees while promoting efficient and cost-effective care delivery. Question 84. How do managed care organizations, MCOs, impact healthcare delivery in Colorado? A. By decreasing administrative efficiency. B. By limiting patient access to healthcare services. C. By promoting care coordination and preventive care. D. By increasing healthcare costs. The correct answer, C. By promoting care coordination and preventive care. Explanation. Managed care organizations, MCOs, impact healthcare delivery in Colorado by promoting care coordination and preventive care. MCOs emphasize proactive management of patient health through preventive services, wellness programs, and care management initiatives. By coordinating care among providers and focusing on preventive interventions, MCOs aim to improve health outcomes, enhance patient satisfaction, and control healthcare costs over time. Question 85. What distinguishes managed care organizations, MCOs, from traditional fee-for-service healthcare models in Colorado? A. MCOs prioritize quantity over quality of care. B. MCOs focus on cost containment through utilization management. C. MCOs provide unlimited access to healthcare services. D. MCOs have higher administrative costs. The correct answer, B. MCOs focus on cost containment through utilization management. Explanation: Managed care organizations, MCOs, in Colorado distinguish themselves from traditional fee-for-service healthcare models by focusing on cost containment through utilization management. Unlike fee-for-service models, which often incentivize volume-based care delivery, MCOs employ strategies such as utilization review, provider networks, and care coordination to optimize resource utilization, control costs, and improve the efficiency of healthcare delivery. Question 86. What is the purpose of an explanation of benefits, EOB, in the context of health insurance claims in Colorado? A. To bill the insured for medical services. B. To inform the insured about claim denials. C. To provide a detailed breakdown of healthcare services and insurance coverage. D. To request additional documentation from healthcare providers. The correct answer, C. To provide a detailed breakdown of healthcare services and insurance coverage. Explanation: An explanation of benefits, EOB, in Colorado serves the purpose of providing a detailed breakdown of healthcare services and insurance coverage. It outlines the medical services rendered, the amount billed by healthcare providers, the portion covered by insurance, any deductibles or copayments owed by the insured, and any reasons for claim denials or adjustments. EOBs help insured individuals understand their healthcare expenses and verify that their insurance benefits have been accurately applied. Question 87. How do health insurance companies in Colorado prevent and detect fraud in claims processing? A. By delaying claims processing. B. By outsourcing claims processing to third-party vendors. C. By implementing fraud detection algorithms and manual reviews. D. By increasing premiums for all policyholders. The correct answer, C. By implementing fraud detection algorithms and manual reviews. Explanation: Health insurance companies in Colorado prevent and detect fraud in claims processing by implementing fraud detection algorithms and conducting manual reviews. These strategies help identify suspicious patterns, inconsistencies, or irregularities in claims submissions. Additionally, insurers may collaborate with law enforcement agencies, utilize data analytics tools, and provide training to employees to enhance fraud prevention efforts and protect policyholders' interests. Question 88. What is the primary objective of claims adjudication in the health insurance industry in Colorado? A. To deny legitimate claims. B. To delay payment to healthcare providers. C. To evaluate and settle insurance claims accurately and efficiently. D. To increase administrative costs. The correct answer, C. To evaluate and settle insurance claims accurately and efficiently. Explanation: The primary objective of claims adjudication in the health insurance industry in Colorado is to evaluate and settle insurance claims accurately and efficiently. Claims adjudication involves reviewing submitted claims, verifying policy coverage, determining the amount payable, and processing payments to healthcare providers or policyholders. By conducting fair and prompt adjudication, insurers ensure that legitimate claims are paid promptly while guarding against fraudulent or excessive claims. Question 89. How do health insurance companies in Colorado utilize explanation of benefits, EOBs, and claims statements? A. To obscure billing information from policyholders. B. To communicate claim denials only. C. To provide transparency and accountability in claims processing. D. To withhold reimbursement to healthcare providers. The correct answer, C. To provide transparency and accountability in claims processing. Explanation: Health insurance companies in Colorado utilize explanation of benefits, EOBs, and claims statements to provide transparency and accountability in claims processing. These documents offer detailed information about healthcare services rendered, insurance coverage, and payment determinations. By sharing EOBs and claims statements with policyholders, insurers foster transparency, help insured individuals understand their healthcare expenses, and ensure that claims are processed accurately and fairly. Question 90. What role do claims processing and adjudication play in the health insurance industry in Colorado? A. They increase administrative burden and costs. B. They expedite claim payments to healthcare providers. C. They facilitate accurate assessment and settlement of insurance claims. D. They discourage policyholders from seeking medical treatment. The correct answer, C. They facilitate accurate assessment and settlement of insurance claims. Explanation. Claims processing and adjudication in the health insurance industry in Colorado play a vital role in facilitating accurate assessment and settlement of insurance claims. These processes involve reviewing claims for completeness, verifying policy coverage, assessing medical necessity, and determining the appropriate reimbursement amounts. By efficiently processing and adjudicating claims, insurers ensure timely payments to healthcare providers and fair treatment of policyholders. Question 91. How do explanation of benefits, EOBs, benefit policyholders in Colorado's health insurance system? A. By concealing information about healthcare expenses. B. By preventing policyholders from disputing claim denials. C. By providing transparency and insight into healthcare costs and coverage. D. By delaying reimbursement to healthcare providers. The correct answer, C. By providing transparency and insight into healthcare costs and coverage. Explanation. Explanation of benefits, EOBs, benefit policyholders in Colorado's health insurance system by providing transparency and insight into healthcare costs and coverage. EOBs offer detailed information about the services provided, the amount billed, the portion covered by insurance, and any out-of-pocket expenses owed by the policyholder. By reviewing EOBs, insured individuals can verify that their insurance benefits have been applied correctly and understand their financial responsibilities for healthcare services. Question 92. How does fraud prevention and detection contribute to the integrity of the health insurance system in Colorado? A. By increasing healthcare costs for policyholders. B. By fostering trust and confidence in the insurance industry. C. By discouraging individuals from seeking medical treatment. D. By delaying claim payments to healthcare providers. The correct answer, B. By fostering trust and confidence in the insurance industry. Explanation. Fraud prevention and detection contribute to the integrity of the health insurance system in Colorado by fostering trust and confidence in the insurance industry. When insurers effectively prevent and detect fraudulent activities, they demonstrate their commitment to protecting policyholders' interests, maintaining fair and transparent business practices, and safeguarding the financial stability of the healthcare system. By upholding integrity and accountability, insurers help build public trust and preserve the credibility of health insurance coverage. Question 93. In Colorado, what is the primary purpose of consumer rights and protections in the context of health insurance? A. To limit access to healthcare services. B. To ensure fair treatment of policyholders and promote transparency. C. To increase insurance premiums for all policyholders. D. To discourage individuals from purchasing health insurance. The correct answer, B. To ensure fair treatment of policyholders and promote transparency. Explanation. Consumer rights and protections in Colorado aim to ensure fair treatment of policyholders and promote transparency within the health insurance industry. These regulations safeguard consumers against unfair practices, such as deceptive marketing, unjust claim denials, and discriminatory treatment. By upholding consumer rights, Colorado's health insurance regulations foster trust between insurers and policyholders, enhance accountability, and facilitate informed decision-making. Question 94. What ethical considerations should insurance agents in Colorado adhere to during health insurance sales and service? A. Prioritizing their personal interests over the needs of clients. B. Providing inaccurate information to policyholders to secure sales. C. Acting in the best interest of clients and maintaining confidentiality. D. Engaging in high-pressure sales tactics to meet sales quotas. The correct answer, C. Acting in the best interest of clients and maintaining confidentiality. Explanation. Insurance agents in Colorado are ethically obligated to act in the best interest of their clients and maintain confidentiality. This includes providing accurate information, recommending suitable insurance products based on clients' needs, and safeguarding clients' personal information. By prioritizing client welfare and upholding ethical standards, agents contribute to consumer trust, satisfaction, and long-term relationships. Question 95. How do fair marketing and sales practices benefit consumers in Colorado's health insurance market? A. By limiting consumer choices. B. By promoting transparency and preventing deceptive practices. C. By increasing premiums for all policyholders. D. By discouraging individuals from purchasing health insurance. The correct answer, B. By promoting transparency and preventing deceptive practices. Explanation. Fair marketing and sales practices benefit consumers in Colorado's health insurance market by promoting transparency and preventing deceptive practices. These regulations ensure that consumers receive accurate information about insurance products, coverage options, and costs. By prohibiting misleading advertising and sales tactics, Colorado protects consumers from making uninformed decisions and fosters trust between insurers and policyholders. Question 96. What role does consumer protection play in the regulation of health insurance in Colorado? A. To prioritize insurer profits over consumer interests. B. To advocate for unfair treatment of policyholders. C. To safeguard consumer rights and ensure fair treatment by insurers. D. To increase administrative burdens for insurance companies. The correct answer, C. To safeguard consumer rights and ensure fair treatment by insurers. Explanation. Consumer protection regulations in Colorado aim to safeguard consumer rights and ensure fair treatment by insurers. These regulations establish standards for transparency, honesty, and accountability in insurance transactions. By enforcing consumer protection laws, Colorado's regulatory authorities hold insurers accountable for delivering on their promises, providing adequate coverage, and treating policyholders fairly. Question 97. How do ethical considerations influence health insurance sales and service in Colorado? A. By encouraging deceptive marketing practices. B. By prioritizing insurer profits over consumer interests. C. By promoting honesty, integrity, and fair treatment of policyholders. D. By discouraging individuals from purchasing health insurance. The correct answer, C. By promoting honesty, integrity, and fair treatment of policyholders. Explanation. Ethical considerations influence health insurance sales and service in Colorado by promoting honesty, integrity, and fair treatment of policyholders. Insurance agents and companies are expected to prioritize the needs of clients, provide accurate information, and adhere to ethical standards in their interactions. By upholding ethical principles, Colorado's insurance professionals contribute to consumer trust, satisfaction, and confidence in the health insurance system. Question 98. How does consumer protection regulation ensure fair treatment of policyholders in Colorado's health insurance market? A. By limiting consumer choices. B. By promoting discriminatory practices. C. By prohibiting unfair claim denials and deceptive marketing. D. By increasing administrative burdens for insurance companies. The correct answer, C. By prohibiting unfair claim denials and deceptive marketing. Explanation. Consumer protection regulation in Colorado's health insurance market ensures fair treatment of policyholders by prohibiting unfair claim denials and deceptive marketing practices. These regulations establish standards for transparency, honesty, and accountability in insurer-consumer interactions. By preventing unfair practices, Colorado's consumer protection laws safeguard policyholders' rights, promote trust in the insurance industry, and facilitate informed decision-making. Question 99. How do ethical considerations impact the relationship between insurance agents and clients in Colorado? A. By prioritizing insurer profits over client interests. B. By discouraging transparency and honesty in sales practices. C. By fostering trust, integrity, and mutual respect. D. By promoting high-pressure sales tactics. The correct answer, C. By fostering trust, integrity, and mutual respect. Explanation. Ethical considerations impact the relationship between insurance agents and clients in Colorado by fostering trust, integrity, and mutual respect. Agents who prioritize clients' interests, provide accurate information, and act with integrity build strong, long-lasting relationships based on trust. By upholding ethical standards, insurance professionals in Colorado contribute to positive client experiences, satisfaction, and confidence in the insurance industry. Question 100. What is the primary purpose of optional policy riders and endorsements in health insurance policies in Colorado? A. To increase the complexity of insurance policies. B. To provide additional coverage options tailored to individual needs. C. To limit the coverage offered by insurance policies. D. To reduce the premiums paid by policyholders. The correct answer, B. To provide additional coverage options tailored to individual needs. Explanation. Optional policy riders and endorsements in health insurance policies in Colorado serve the primary purpose of providing additional coverage options tailored to individual needs. These riders allow policyholders to customize their insurance coverage by adding specific benefits or protections not included in standard policies. By offering flexibility and addressing specific concerns, riders enhance the value of insurance coverage and ensure policyholders have comprehensive protection against various risks. Question 101. In Colorado, what role do supplemental health insurance products, such as dental and vision insurance, play in the insurance market? A. They are mandatory for all policyholders. B. They provide coverage for primary medical expenses. C. They offer additional coverage for specific healthcare services. D. They limit access to healthcare providers. The correct answer, C. They offer additional coverage for specific healthcare services. Explanation. Supplemental health insurance products, such as dental and vision insurance, play a crucial role in the insurance market in Colorado by offering additional coverage for specific healthcare services. While primary medical insurance covers essential healthcare needs, supplemental plans address services that may not be fully covered or included in standard health insurance policies, such as dental checkups, vision exams, and corrective lenses. These products provide policyholders with comprehensive coverage and help mitigate out-of-pocket expenses for specialized care. Question 102. How do critical illness and long-term care insurance policies benefit policyholders in Colorado? A. By limiting access to healthcare services. B. By providing coverage for routine medical expenses. C. By offering financial protection against specific serious illnesses or extended care needs. D. By increasing premiums without adding significant value. The correct answer, C. By offering financial protection against specific serious illnesses or extended care needs. Explanation. Critical illness and long-term care insurance policies benefit policyholders in Colorado by offering financial protection against specific serious illnesses or extended care needs. These policies provide lump sum payments or reimbursement for medical expenses associated with critical illnesses, such as cancer, heart attack, or stroke, and long-term care services, including nursing home care or in-home assistance. By supplementing primary health insurance coverage, these policies help policyholders manage the financial burden of unexpected medical events and ensure access to necessary care. Question 103. What is the purpose of optional policy riders and endorsements in health insurance policies in Colorado? A. To limit the coverage provided by insurance policies. B. To increase administrative burdens for insurance companies. C. To provide additional coverage options based on policyholder preferences. D. To reduce the premiums paid by policyholders. The correct answer, C. To provide additional coverage options based on policyholder preferences. Explanation. Optional policy riders and endorsements in health insurance policies in Colorado serve the purpose of providing additional coverage options based on policyholder preferences. These riders allow policyholders to tailor their insurance coverage to meet their specific needs and circumstances. By selecting optional riders, policyholders can enhance their protection against certain risks or add benefits not included in standard policies, thereby ensuring comprehensive coverage that aligns with their individual requirements. Question 104. How do supplemental health insurance products contribute to comprehensive coverage for policyholders in Colorado? A. By limiting coverage to primary medical expenses only. B. By increasing premiums without adding significant value. C. By offering additional coverage for specific healthcare services, such as dental and vision care. D. By decreasing the complexity of insurance policies. The correct answer, C. By offering additional coverage for specific healthcare services, such as dental and vision care. Explanation. Supplemental health insurance products contribute to comprehensive coverage for policyholders in Colorado by offering additional coverage for specific healthcare services, such as dental and vision care. While primary medical insurance addresses essential healthcare needs, supplemental plans extend coverage to services not typically covered or only partially covered by standard health insurance policies. By filling gaps in coverage and reducing out-of-pocket expenses for specialized care, supplemental products enhance the overall value of insurance coverage for policyholders. Question 105. What distinguishes critical illness and long-term care insurance policies from standard health insurance coverage in Colorado? A. They provide coverage for routine medical expenses. B. They limit access to healthcare services. C. They offer financial protection against specific serious illnesses or extended care needs. D. They increase administrative burdens for insurance companies. The correct answer, C. They offer financial protection against specific serious illnesses or extended care needs. Explanation. Critical illness and long-term care insurance policies in Colorado distinguish themselves from standard health insurance coverage by offering financial protection against specific serious illnesses or extended care needs. While standard health insurance typically covers routine medical expenses and hospitalization, critical illness and long-term care policies provide additional benefits for significant health events, such as cancer, Alzheimer's disease, or the need for extended nursing home care. These policies offer peace of mind and financial security by helping policyholders manage the high costs associated with critical illnesses or long-term care services. Question 106. How do optional policy riders and endorsements enhance the flexibility of health insurance coverage in Colorado? A. By limiting coverage options available to policyholders. B. By increasing administrative burdens for insurance companies. C. By providing additional benefits or coverage options tailored to individual needs. D. By decreasing the complexity of insurance policies. The correct answer, C. By providing additional benefits or coverage options tailored to individual needs. Explanation. Optional policy riders and endorsements enhance the flexibility of health insurance coverage in Colorado by providing additional benefits or coverage options tailored to individual needs. These riders allow policyholders to customize their insurance policies by adding specific protections or benefits not included in standard plans. By offering flexibility and choice, optional riders ensure that policyholders can tailor their coverage to address their unique healthcare needs and preferences, thereby maximizing the value and utility of their insurance policies. Question 107. In Colorado, what are the tax implications of health insurance premiums and benefits for policyholders? A. Premiums are not tax-deductible, but benefits are taxed as income. B. Premiums are tax-deductible, but benefits are not taxed as income. C. Both premiums and benefits are tax-deductible. D. Both premiums and benefits are taxed as income. The correct answer, A. Premiums are not tax-deductible, but benefits are taxed as income. Explanation. In Colorado, health insurance premiums paid by policyholders are generally not tax-deductible for individuals unless they qualify for certain exceptions, such as self-employed individuals or those with high medical expenses exceeding a certain percentage of their income. However, benefits received from health insurance policies may be subject to taxation if they are considered income by the Internal Revenue Service, IRS, such as reimbursements for lost wages due to sickness or disability. It's important for policyholders to consult with a tax advisor to understand the specific tax implications of their health insurance coverage. Question 108. How do insurers and policyholders in Colorado ensure compliance with IRS regulations regarding health insurance? A. By ignoring IRS regulations and focusing solely on state laws. B. By implementing their own tax policies independent of IRS guidelines. C. By reporting relevant information accurately and timely to the IRS. D. By lobbying for changes to IRS regulations. The correct answer, C. By reporting relevant information accurately and timely to the IRS. Explanation. Insurers and policyholders in Colorado ensure compliance with IRS regulations regarding health insurance by reporting relevant information accurately and timely to the IRS. This includes providing necessary documentation, such as Form 1095-A for individuals enrolled in marketplace plans or Form 1095-B/C for other types of coverage, to report coverage details to both the IRS and policyholders. By adhering to IRS guidelines and fulfilling reporting requirements, insurers and policyholders can avoid penalties and maintain compliance with federal tax laws. Question 109. What are the reporting requirements for insurers and policyholders in Colorado regarding health insurance coverage? A. There are no reporting requirements for insurers and policyholders. B. Insurers must report coverage details to the IRS, but policyholders are not required to report anything. C. Insurers and policyholders must both report relevant information to the IRS. D. Only policyholders are required to report coverage details to the IRS. The correct answer, C. Insurers and policyholders must both report relevant information to the IRS. Explanation. In Colorado, both insurers and policyholders have reporting requirements regarding health insurance coverage. Insurers are responsible for providing coverage details to the IRS, such as the names and social security numbers of covered individuals, as well as issuing Form 1095-A, B, or C to policyholders to report this information. Policyholders, in turn, may need to report certain details on their tax returns, depending on their specific circumstances and the type of coverage they have. Compliance with these reporting requirements ensures accurate tax filing and helps prevent tax-related issues for both insurers and policyholders. Question 110. How do insurers and policyholders in Colorado manage compliance with IRS regulations concerning health insurance taxation? A. By disregarding IRS regulations and adhering only to state laws. B. By establishing their own tax guidelines separate from IRS requirements. C. By accurately reporting relevant information to the IRS in a timely manner. D. By lobbying against IRS regulations. The correct answer, C. By accurately reporting relevant information to the IRS in a timely manner. Explanation. Insurers and policyholders in Colorado manage compliance with IRS regulations concerning health insurance taxation by accurately reporting relevant information to the IRS in a timely manner. This includes providing necessary documentation, such as Form 1095-A for marketplace plans or Form 1095-B/C for other types of coverage, to report coverage details to both the IRS and policyholders. By fulfilling reporting requirements and adhering to IRS guidelines, insurers and policyholders can ensure compliance with federal tax laws and avoid potential penalties or fines. Question 111. What is the tax treatment of health insurance premiums and benefits for policyholders in Colorado? A. Premiums are tax-deductible, and benefits are not taxed as income. B. Both premiums and benefits are tax-deductible. C. Premiums are not tax-deductible, but benefits are not taxed as income. D. Premiums and benefits are taxed as income. The correct answer, C. Premiums are not tax-deductible, but benefits are not taxed as income. Explanation. In Colorado, health insurance premiums paid by policyholders are generally not tax-deductible for individuals, except in certain cases such as self-employed individuals or those with high medical expenses exceeding a certain percentage of their income. However, benefits received from health insurance policies are typically not taxed as income, unless they are considered taxable income by the IRS, such as reimbursements for lost wages due to sickness or disability. It's essential for policyholders to understand the tax implications of their health insurance coverage and consult with a tax advisor if necessary. Question 112. How do health insurers in Colorado ensure compliance with IRS regulations regarding taxation of health insurance premiums and benefits? A. By ignoring IRS regulations and following only state laws. B. By establishing their own tax policies independent of IRS guidelines. C. By accurately reporting relevant information to the IRS and issuing necessary documentation to policyholders. D. By lobbying for changes to IRS regulations. The correct answer, C. By accurately reporting relevant information to the IRS and issuing necessary documentation to policyholders. Explanation. Health insurers in Colorado ensure compliance with IRS regulations regarding taxation of health insurance premiums and benefits by accurately reporting relevant information to the IRS and issuing necessary documentation to policyholders. This includes providing coverage details to the IRS and issuing Form 1095-A, B, or C to policyholders to report this information. By adhering to IRS guidelines and fulfilling reporting requirements, insurers can maintain compliance with federal tax laws and avoid penalties or fines related to taxation. Question 113. What role do IRS regulations play in governing health insurance taxation and compliance in Colorado? A. They have no impact on health insurance taxation and compliance. B. They provide guidelines and requirements for insurers and policyholders to follow. C. They are solely responsible for enforcing state tax laws. D. They are advisory in nature and not legally binding. The correct answer, B. They provide guidelines and requirements for insurers and policyholders to follow. Explanation. IRS regulations play a crucial role in governing health insurance taxation and compliance in Colorado by providing guidelines and requirements for insurers and policyholders to follow. These regulations establish standards for reporting coverage details, issuing necessary documentation to policyholders, and ensuring compliance with federal tax laws related to health insurance. By adhering to IRS guidelines, insurers and policyholders can maintain compliance, facilitate accurate tax filing, and avoid potential penalties or fines. Question 114. How are technological innovations impacting healthcare delivery in Colorado? A. They are increasing administrative burden without improving patient care. B. They are reducing healthcare costs while improving patient outcomes. C. They are leading to privacy breaches and compromising patient confidentiality. D. They are causing disruptions in insurance coverage. The correct answer, B. They are reducing healthcare costs while improving patient outcomes. Explanation: technological innovations in healthcare delivery in Colorado are leading to reduced healthcare costs while simultaneously improving patient outcomes. Innovations such as electronic health records, EHRs, telemedicine, and wearable health devices enable healthcare providers to deliver more efficient and personalized care, leading to better health outcomes for patients. Additionally, advancements in medical technology allow for early detection and treatment of diseases, further enhancing the quality of care provided to individuals. Question 115. What role does telemedicine play in healthcare delivery in Colorado? A. It reduces the need for in-person medical visits, particularly in rural areas. B. It increases healthcare costs and decreases patient access to care. C. It has no significant impact on healthcare delivery in the state. D. It requires patients to travel long distances to receive medical treatment. The correct answer, A. It reduces the need for in-person medical visits, particularly in rural areas. Explanation: telemedicine plays a significant role in healthcare delivery in Colorado by reducing the need for in-person medical visits, especially in rural areas where access to healthcare services may be limited. Through telemedicine, patients can consult with healthcare providers remotely via video conferencing or other electronic communication methods, allowing for timely medical assessments, diagnoses, and treatment recommendations. This technology enhances patient access to care, improves healthcare efficiency, and helps address disparities in healthcare delivery across different regions of the state. Question 116. How do value-based care models impact healthcare reimbursement in Colorado? A. They lead to higher reimbursement rates for healthcare providers. B. They incentivize volume-based care over quality of care. C. They tie reimbursement to patient outcomes and quality metrics. D. They have no effect on healthcare reimbursement. The correct answer, C. They tie reimbursement to patient outcomes and quality metrics. Explanation: value-based care models in Colorado tie healthcare reimbursement to patient outcomes and quality metrics rather than the volume of services provided. These models incentivize healthcare providers to deliver high-quality, cost-effective care that emphasizes patient outcomes, satisfaction, and overall health improvement. By shifting reimbursement incentives toward value and quality rather than quantity, value-based care models aim to improve the overall effectiveness and efficiency of healthcare delivery, leading to better health outcomes for patients. Question 117. What are the primary benefits of value-based care models in Colorado? A. They increase healthcare costs while decreasing patient satisfaction. B. They prioritize quantity of services over quality of care. C. They improve patient outcomes and reduce healthcare spending. D. They lead to longer wait times for medical appointments. The correct answer, C. They improve patient outcomes and reduce healthcare spending. Explanation: the primary benefits of value-based care models in Colorado include improving patient outcomes and reducing healthcare spending. By incentivizing healthcare providers to focus on delivering high-quality, cost-effective care that emphasizes patient outcomes and satisfaction, value-based care models help optimize the use of healthcare resources, minimize unnecessary interventions, and ultimately lead to better health outcomes for individuals. Additionally, these models contribute to the overall sustainability of the healthcare system by curbing excessive spending and promoting efficient resource allocation. Question 118. How do emerging trends in health insurance impact healthcare accessibility in Colorado? A. They restrict access to healthcare services for certain population groups. B. They enhance healthcare accessibility through innovative coverage options. C. They increase out-of-pocket costs, making healthcare less accessible. D. They have no significant effect on healthcare accessibility. The correct answer, B. They enhance healthcare accessibility through innovative coverage options. Explanation. Emerging trends in health insurance in Colorado, such as value-based care models and telemedicine services, enhance healthcare accessibility through innovative coverage options. These trends prioritize patient-centered care, expand access to telehealth services, and offer flexible insurance plans tailored to individual needs. By embracing these innovations, individuals in Colorado can access a wider range of healthcare services, receive timely medical care, and experience improved health outcomes, ultimately enhancing overall healthcare accessibility in the state. Question 119. How are technological advancements transforming healthcare delivery in Colorado? A. They are increasing administrative burdens and hindering patient care. B. They are leading to higher healthcare costs without improving outcomes. C. They are streamlining processes and improving patient access to care. D. They are causing disruptions in insurance coverage and reimbursement. The correct answer, C. They are streamlining processes and improving patient access to care. Explanation. Technological advancements in healthcare delivery in Colorado are streamlining processes and improving patient access to care. Innovations such as electronic health records, EHRs, telemedicine, and digital health platforms enable healthcare providers to deliver more efficient and coordinated care, reducing administrative burdens and enhancing communication among healthcare teams. Additionally, these technologies facilitate remote patient monitoring, telehealth consultations, and virtual care delivery, thereby improving access to healthcare services for individuals across the state. Question 120. What impact do value-based care models have on healthcare quality in Colorado? A. They prioritize quantity of services over quality of care. B. They lead to longer wait times for medical appointments. C. They incentivize healthcare providers to focus on improving patient outcomes. D. They have no significant effect on healthcare quality. The correct answer, C. They incentivize healthcare providers to focus on improving patient outcomes. Explanation. Value-based care models in Colorado incentivize healthcare providers to focus on improving patient outcomes by linking reimbursement to quality metrics and patient satisfaction measures. By aligning financial incentives with healthcare quality goals, these models encourage providers to adopt evidence-based practices, implement care coordination strategies, and engage in proactive population health management efforts. As a result, value-based care models contribute to the overall improvement of healthcare quality, leading to better health outcomes and patient experiences across the state.